Good evening. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, the 30th of March, 2020, just around 5:30 p.m. So what a day we're having in all these markets. Pretty crazy, right? We had a huge update which broke the pattern that we've been having for the past couple of weeks, where we get COVID-19 news, the market would drop, sometimes limit down on Sunday night, reopen Monday morning, go another short limit, and then bounce and do whatever it's going to do. This time around, what we did is we did drop hard on Sunday night, but nowhere near a limit, turned around just before the opening bell on the New York Stock Exchange and had a monster day, and we're continuing tonight. Warning sign. You're at the end of the day, you're at the end of a month rather, end of a quarter, and you set up with a large Monday for a Tuesday reversal. Not saying it has to happen, I'm giving you a warning sign. This market is getting a nice bounce, but is it the end of this bear leg? I've got my own doubts, and I'll show you why in parts of it. As we take a look, you're getting a bounce in a market, but off of what? You're up to 26.21 from 24.37. You're nowhere near 33.81. But if you watch financial TV, you get the impression this market's taken off to the races because that's what announcers do. This is a very small bounce on a closing basis. When we take a look at where the market's at, these are Fibonacci counts, and I took it from the high to the low. This is a 1/3 retracement. You can even get to 50%, 2,800. That, I think, stretching it, but let's assume it happens. Okay. I think the market's getting into a resistance zone is what I'm saying. When I look at the Swingline Study, I certainly have the pattern of a higher high, and I have a higher low. That's bullish, no question about that. The battleground right now is the 18-day average of closes, and you've been here basically for the past 3.5 sessions. I don't know what today's going to do. Maybe I should say 3 1/10 sessions the way we're at. But that seems to be what the market's playing at right now. When we take a look, let me get over here to Bollinger Bands, they're far away. Now remember what a Bollinger Band is. A Bollinger Band is an algorithm designed to keep the market trading within the prices 95% of the time. A real bearish market runs against it. It gets over it, back, either side of it. This has gotten away from it. So you've got this 2173 reading, and it's way up here at what, 2922. Those numbers are far from where you're at 2622. I will say that they're not in play. What I think's going on is the market's now churning sideways. There's good news for this market. If you take a look, what I think has happened is this vertical decline basically has come to an end, and we're going more into a trading type market. When I take a look at what momentum has done, it's up. So going home, the market is friendly. You have the higher lows, you have the higher highs, that's bullish, you're over the 18-day average. Warning sign. If you take out this 2445, be it tomorrow, the day after, I'd be very, very concerned that this was no more than that rally into that 1/3 of the size of the decline, and no more than that. That is the point I'm making. In the NASDAQ, it's similar. First off, this market is already overbought. It's got a 73 reading, as you can see here. Any number over 70 is overbought. Is the trend up? Well, yes. Did this bear leg end? Well, yes. We're now fighting at the 18-day average of closes. Between here, if it jumps, it's got another level of major resistance at 82.37, the 200-day moving average, and then the Bollinger Band around 84.79. So I see a bounce in the market, and what I'm going to try to do tomorrow or the day after, I'd like to do it tomorrow, is do a special report on this, on Fibonacci retracements as to where these stock indices are, and leave it at that, because I think it's going to tell you something of a story. In the Dow, we're fighting at the 18-day average of closes. Now, with tonight's action, this wasn't the way. The high during Monday was 22,239. We've taken that out. So I could remove this down arrow and say we have higher lows and higher highs. You still haven't taken out this all-important 22,545. And in fact, when I come back to the others, I keep looking at that high that we made there and then the high here. If you don't take those out and you reverse down, this is no more than a bounce in the market. If it takes those out, maybe it's something more. I have an open mind to it. When we come to the Russell, you finally got to the 18-day average of closes just now. So we've got a pattern of higher lows, higher highs. It's right into its resistance, which it owed. If you think about it, this market had lost its embedded reading back here. When that occurs, prices often, I'm not using the word always because it's not accurate, but often, take a run at the closest moving average. Now in this case, I've got a bunch posted for you. I've got the 18, I've got the 200 and the 100-day posted. And the market finally got up tonight actually, to that number. I'll call this market now neutral. A close over 1145, let's call it, would be friendly tomorrow. In the VIX, the battleground is fighting right here at the 18-day average of closes. This is a high number in the VIX, folks. This is not trading in the 20 to 30 level. This is a number that's trading in the 50, 60 level. It's still a sign of a lot of volatility and a lot of fear. We're not trending any longer. You've got a higher high, lower low. That is not a trend. The market peaked itself out in the 85 level, numbers that many of us haven't seen for decades. Okay, now the market has come back. Is it trending? It is not. It's just whipping back and forth. In the T-bond market, momentum is still pointing up, not yet overbought, but knocking on the door of it. The action, still bullish, higher lows, higher highs, could easily end with a move under 177.4. This whole rally has bothered me recently. This was the peak. This is just a counter reaction to it breaking down, coming back up. It's not acting like a true bull market just here. In the 10-year notes, I would have been much happier to see this market hit the upper Bollinger Band today. Yes, it's bullish, but yes, it's very overbought. Support's back at 137.11. When we take a look at the dollar index, the battleground is the 18-day average of closes. Even off this big break, you rallied back, tested it, and then you moved. Now you've come back down to it, and you're fighting your battle right there. Currencies have been a son of a gun to trade. They have moved in vertical movements this whole month, been very hard to get, and suddenly we're starting to see ranges that are narrowing in. Remember, it's month end. Is there going to be demand for the dollar or not? You got to question just where you're at. In the eurocurrency, this whole rally from under this 107 area all the way up, it was dramatic, into the, what here, the 100-day average and the 18 stalled. You're still in a downtrend. You have lower highs, lower lows in this market. You have not decided to go to an uptrend. In order to get to an uptrend, you have to take out this high, 111.87.5. Who's controlling the market at this minute? Nobody. While you've got the swing line down, you're fighting right on that 18-day average and you have momentum up. You've got divergence all over the chart. In the Japanese yen, nice that you had this big break, but where did you rally back to? How often do I talk about this line in the sand? You get a big rally, where do you think you fall back to often? You fight your battle against that number. Now you go down, where do you think you're going to fight on the way up? What I teach is it's often. It is not all the time, but it's often right at that number. And if it breaks from here, well, the 100-day average has some support. What do we have? We have a lower low and a higher high. That's a very difficult pattern to try to figure out anything from. What ended up happening is you had an embedded reading, and when you lose it, prices often make a run to the 18-day average. It ended the downtrend, and now you're sort of churning right in between that. In June, Bitcoin, some people are looking at April, some June, doesn't matter to me, it's all the same. You got to the 18-day average of closes, you broke back down, you're not in a trend. You have a higher high, lower low. Remember, in May, we get to that halving process. So the question is, was this enough of a break? Now, this market has moved dramatically this year already, so remember that. All of a sudden, May Brent versus May WTI crude, well, we want to start moving properly to the Junes against each other. But you can see how the market's pulled back. When we come to the May Brent right now, and this is for, remember, we're already into the Tuesday action, we have the lower highs, lower lows with what? An embedded reading. It's still bearish. A week ago on Tuesday, which is tomorrow, I was on with Bonnie Quinn of Bloomberg, and she said, Ira, it was $24, I think, in the May WTI, right in this area. Let's see if I can get back to a week ago Tuesday. Yeah, it was right in this area here. And I said, she said, what do you think? I said, next move's to the downside. I don't feel that I've given bad advice on that. It's been to the downside, and now the question is, what is cheap? We suddenly have oil in teens. Very important to remember. There will be a number where it's too cheap. I don't know what that number is. The trend is down, and my eyes will go in on the slow stochastic reading because it rules the chart. When it embeds, it's the number one factor I look at. When I'm looking at gasoline, guess what I'm scared of? You just popped over. Let's take a look again. This is Friday, and the slow stochastics, both numbers are still under 20. Still yesterday, now you're popping over. This is a warning sign. It hasn't closed over. It's only 5:30 or so tonight. So there's plenty of time here, but I'm getting nervous that this market might be saying this 48 level could be it, and you maybe don't want to push your luck anymore. In that gas, you're oversold. There's no trend. You have a lower low, a higher high, a mishmash with downside bias. Nah, I don't see anything of interest to me there at all. So when I put it together and I try to give you ideas, one of the things I try to do is with our guide to technical indicators. And I put this together years ago with our good friends from Modern Trader, and it goes back and it covers so many different areas. It's more than a simple tutorial. It really teaches a lot with examples. It's what I still think is the best piece I've ever seen on this. And all that I see are brokerage firms trying to redo this piece. There's no update to it. The way that these work is the way that they work. I don't know how to make it simpler, okay? That doesn't mean you can't give it your own twist. Everybody twists everything, but the basics are right here. So how do you get this? Well, it's really simple. All you need to do is go to our website and sign up right on the bottom of that. You'll see free offers. Get this put out to you. We send it by email. You can click up here. It'll come to you the same way.